The local exchange facing subdued global sentiments this morning, despite Wall Street, the rally there. Last night, U.S. Fed Chair Jerome Powell reiterating disinflation has begun in some sectors, but he flagged that the rate hikes could continue. Let's get more now on these and other market trends, and we're joined by independent markets analyst Jimmy Moyaha. Jimmy, good morning to you, and thanks for your time. Let's start with your quick overview of how the local index is faring in early trade.
Good morning, Philip. Morning to our viewers. Early trade, we're seeing that the local bourse is actually holding its own. We've seen that overnight Asian stocks were trading in the red, with Sydney, Tokyo, and China all in the red at the moment, and we're seeing that sentiment would largely be expected to filter through later on during the day. But for the moment, top 40 is opened in the green. We're seeing some signs of positivity on the industrials and resources side of things, as well as the financial side of it. So hopefully we can continue to see some positivity out of the all share and out of the top 40 throughout the day. On the currency side of it, though, we're seeing that the rand is remaining at elevated weak levels. So sitting at about 17.55 against the dollar, sitting at about 21 rand 15 against the pound, and about 18 rand 83, closer to that 19 rand level against the euro. So not a lot of positivity on the currency side of it, but on the equity side of it, our top 40 and our all share looking strong.
Let's talk then about the Federal Reserve Chairperson or Chairman Jerome Powell last night flagging that additional interest rate hikes will be needed. What does this mean for that economy in the U.S., and then you add to that the emerging market economies that mimic the West?
Well, I mean, we know that we've had a lot of mixed signals coming out of the U.S. Fed with different governors speaking, and some have echoed Jerome Powell's sentiments around the fact that we do need, or America rather does need to continue on the rate hiking cycle. Jerome Powell's latest estimate sees that we could potentially see interest rates reach between 5 and 5.25% in the U.S., which is very different from the estimate where we had between 4.5 and 4.75% previous estimates. So I think at the moment the sentiment around that is largely focused on the pressures that will result in the growing jobs numbers. We know that the jobs report that we saw on Friday was significantly higher than what we expected, and the market saw that as a positive light, but still, regardless of the positivity that would have on the inflationary picture, that still reads in through to the worries around the inflationary, or the pressure it would then put on the U.S. economy as those jobs or as those consumers start to consume more. And so from a directional point of view, the U.S. Fed has said that they're waiting to see other data points come out as well, but they've cautioned that even though the inflationary conversation is on the decline, we can expect that interest rates will remain elevated until they're satisfied that the inflation picture is below or towards their targeted range, which is very far off from where we're at the moment.
Let's quickly talk about company news. Paper and pulp business Sappi will release its first quarter results. And how are their numbers looking?
Well, this is their best performing first quarter in the history of Sappi. Numbers were all in the positive. Their earnings before interest and tax was up about 21%. They managed to reduce their net debt by some 35% as well. So all in all, very good numbers from them. They did, of course, outline that they faced some headwinds from the ongoing inflation concerns that we're seeing around the world, from the Russia-Ukraine war, from the fact that they've been waiting for the Chinese economy to reopen as well, much like other companies as well. So from that perspective, I mean, they outlined that despite those headwinds, they had their best first quarter in the history of Sappi, and as I mentioned, their numbers were really impressive. Things like their net asset value as well, that was up about 27%. So all in all, good numbers from them. And from an outlook perspective going forward, they've said that despite the challenges that they have seen or that they will continue to face in 2023, they're seeing that the relaxation of the energy crisis in Europe, as well as the reopening of the Chinese economy that they have been waiting for, should bode well for the business going forward and should allow them to continue with a strong performance throughout the year.
Let's conclude with financial services and technology group Lesaka Technologies, formerly known as Net1, now that's the company we remember very well, also releasing quarterly results this week. How are those numbers?
Strong set of numbers from their side as well. Their revenues were up some 300% in dollar terms and almost 400% in rand terms. This was largely off the back of the integration with their Connect business that we saw them finally manage to get onto their balance sheet. They outlined that from that perspective that they've managed to keep costs relatively in line with where expectations were, and regardless of that, they're still forging ahead with the benefits of their restructuring plans. And they went through a big restructuring drive, and that's resulted in their Q2 numbers for this year relative to Q2 of last year, exceeding expectations on most fronts actually. And that means that from a debt reduction perspective, they've done well there. From an asset increase perspective, they've done well there. As I said, they managed to integrate the Connect business, and their outlook for the year as well. They're one of the few companies that's actually given outlook saying that yes, COVID, the load shedding has been a dampener, which is something we've gotten from pretty much every company that's reported. They've said that their outlook for the third quarter of 2023 and their outlook for the full year of 2023, they've given details around that, and they expect revenues to be in line with expectations, anywhere between 8.7 and 9.3 billion for the full year. One of the few companies, Lesaka, that has actually given out full year guidance. We've seen that a lot of the companies have taken the tone of just giving out sort of a balanced report saying we will see if we can maintain ongoing levels, but they've actually given more clearer guidance on Q3 and on the full year. And they're expecting that their revenues will increase on their Connect business now that they've managed to integrate that, and now that they've managed to get some of their business units like their consumer business back to profitability.
Independent markets analyst Jimmy Moyaha, thank you very much for that markets update. All right.